What is going on, traders? Welcome back to a brand new video. Celestin Capital here. In this video, we're going to talk about market structure. Before we go into the live chart, we are going to talk about market structure by itself. So, what is market structure exactly? As the name suggests, market structure is basically the structure of the market, whether it is going up, whether it's going down. The market has a structure that it follows. Same with a lot of things in life. There are certain structures, there are certain rules that you have to follow in life, certain structures that are put into place that should be respected, right? Now, the market does not always follow structure because sometimes a break of structure happens. So we're going to talk about that later in the video. But for right now, we're just going to talk about simple structure. So right now, we have this high that was created on this left side right here. What can we expect to happen? Because this is a bullish market, we can expect price to come back down, tap into this structure, which is the line that I put here, to continue to the upside. That's as simple as market structure gets. It's basically the market, the structure of the market. If the market is bullish, you're going to continue to see higher highs, higher lows as well. So what is a higher high and a higher low? Let's look on the right side of the screen over here. Let's take a look at this. Where's the high of the market? Where's the peak of the market? Circle to the different peaks of the market. You can go ahead and pause the video because I'm going to show you in a second. So the different peaks of the market are this. These are the highs of the market. These are the peaks of the market. Where are the lows of the market? Where the market dips. As you see, there was a dip right here, so we can circle this. There's a dip right here, so we can circle this. There's a dip here, so we can also circle that. Now, if you were to look at a simple piece of the market, let's just see this. Let's do something like this. If you were to look at a certain piece of the market, you wouldn't see much, right? You would not see much at all. You would just see this two right here, these two. You'll see this and this. So you wouldn't assume that the market is going up. But as you continue as the market continues to reveal itself, you see that it's actually an uptrend, right? Because this could have been considered a downtrend before I showed you this. This could have been considered a downtrend as well. We just don't know yet. What makes this an uptrend, what makes this market structure an uptrend is because this high over here was broken right over here. When this line closed above, when it's like broke above, this market structure was broken, which makes it a bullish market. And as you see, the low was respected as well. Price did not come below this low. So that's what makes this market a bullish market. And as we reveal the entire thing, you see that overall structure of the market is up. If you draw a channel, you can see that the channel is going up. If you draw a parallel channel, you can see that the channel is going up. Now let's look at the other side of things. Let's look at a bearish market. So if I draw this, you can see that this is a bearish market. Let me actually do this. So right now, this is just a no market, right? What makes this a bearish market is when price breaks below this structure right here. All right. So price broke below the structure. And then if price continues to respect this high over here, this is a bearish market. As you see, price respected the high that I marked over here. So if price actually did this, this would no longer be a bearish market because price broke above the high, the protected high, the high that we expected not to be broken. All right. So this was a structure that was put in place by the market. We didn't expect this structure or rule to be broken, but it did get broken. So in this case, in that instance that I just showed you, that would have been a break of structure, which would have been considered a bullish market. But because the high was respected, this is a bearish market. As you see, the high continues to get respected. You're creating lower lows and lower highs. All right, lower lows and lower highs. In a bullish market, you create higher highs, higher lows because structure is getting higher. All right, remember that. That's the most important thing. Higher highs, higher lows. And then you've got lower lows because the lows continue to get lower. And then the highs continue to get lower as well. So you have lower highs as well. So in a bearish market, a low goes first. So lower lows, lower highs. In a bullish market, high goes first. Higher highs, higher lows. That's the easiest way to remember. Bullish highs first, higher highs, higher lows. Bearish low, the word low comes first. Lower lows, lower highs. All right. So let's hop into a live chart and let me show you guys exactly what I'm talking about, because this is mumbo jumbo for now if I don't show you guys a live example of how you can actually look at this. So if we go on a weekly time frame, what happens? Let's start from the left side over here. We see that the market, nothing happened, right? Just look at this part. Nothing happens yet, right? Because this high is still respected and this low is still respected. So we are in a range. There's nothing here. Now, what makes this a bullish market is when price finally breaks above this high right here, which is somewhere over here. Let me zoom in a little bit. So what makes this a bullish market is when price breaks above the high. This high over here, that we drew the arrow at, it breaks it over here somewhere and it closes above. We need a close above, a candle close above for it to be a break of structure, right? Don't count wicks as a break of structure, even though, you know, on certain time frame, the wick is a close, is a candle close. Whatever time frame you are on at the moment, we want a candle close above. So if we're on a weekly time frame and we have a weekly high, we want a weekly candle close above that structure. If we're on a 5-minute, we have a 5-minute high, we want a 5-minute candle close above for it to be considered a break of structure. And, you know, bearish market being the opposite, break of structure below. So in this case, we're talking about high. So we want to, because we're on the weekly structure, weekly time frame, we want a weekly candle close above. And where does that happen? That happens with this candle right over here. I should delete some things so you can see better. So if we mark this high right here, let's just put it right here. What happens? We get the break above this candle close right here. You see this hammer candle right there? This single candle right here allows us to see that the market is actually bullish. And what happens after the candle breaks above? Price continues to go up. Then we have another high over here. You see this high as well? Let me actually put a line there. There is a high right here. Now, where does this high get broken? Go ahead, take your time. Where does the high get broken? The high gets broken with this candle right over here. You get a close, a weekly close above with this candle right there. All right. So if we continue to follow, you can go ahead and follow structure. You get a break above right here. Continue to follow structure. You get a break above right here. And then something interesting happens. So this is the high right here, and this is the low right here. Something interesting happens. So you got the high right here as well. And then this is our current range over here. Let me actually put lines there, make it better. So we got a high over here, and we got a low over here. So as price, until price breaks this high, you know, it hasn't broken structure yet. Even though we're in a bullish trend, it hasn't broken structure yet because something could happen. And that's exactly what happens here. Something else could happen. What happens here is that instead of price breaking this high with this line right here, which is this line right here, price actually decides to go ahead and break the low. Where's the low? This line right here is the low. So where does it break the low? Tell me which candle breaks the low. It is this candle right over here because we get a close over here. This candle right here did not close below. This next candle right here, there was simply a wick. This did not close below. Remember what I told you. If we're on whatever time frame we are on, we want a candle close on that time frame. This wick right here, this candle right here wicked. It did not close below the line. Where does the line get closed below? Which candle closes below the line? This one right over here. As you can see, price shifted structure. Now this is a shift of structure. So when price is going in one direction and the price shifts to a different direction, price changes direction, we consider that a shift of structure or a break of structure. All right. So we were in a bullish trend. Price broke structure to the downside. All right. So this is a shift of structure. So now what can we expect? We can potentially expect, all right? Now notice I'm using certain words, certain keywords. I'm not saying we know price is going to do this. We can expect price to do certain things because the market does what it wants. All we can do is react to what the market shows us, all right? Keep that in mind. Keep that in mind. Make sure you keep that in at the front of your head. We can only react to what the market shows us. Do not try to predict the market. Only anticipate, only not anticipate, but only react to what happens with the market. I'm not saying you shouldn't predict. You shouldn't analyze the market and predict where it's going to go, but just make sure you don't stick to a 100% bias. What we're doing is we're reacting to what price shows us. If price shows us a certain thing, we're going to react to it. It's just like in boxing and any combat sport. You're reacting to your opponent's move. You're not gonna oh yeah, my opponent's gonna do this, so I'm gonna do this. No, anything could happen. Your opponent could throw any combo, any strike, he could throw a kick in, he could do whatever he wants. What you want to do is react to whatever combination your opponent throws at you. The opponent in this case is the market. We're going to react to whatever combination the market throws at us. So in this case, market broke below once again with this candle, and then we saw a shift of structure. Now price is continuing to the downside. Now where's the high for the downside? Actually delete this. We have a high over here, and then we have another one over here. We have the low over here. And as you see, price continues to break structure to the downside now. So you got a lower high because price broke this low right here. We have a lower high and a lower low. Now, as you see, price continues to break with this candle right here. And then we have another lower high and another lower low over here. And we can continue to move the lines. But this is just the whole point of market structure. It's as simple as that, all right? I don't want to make this a 20-minute video and overcomplicate things. It's as simple as that. Market structure is basically the structure of the market, what the market is showing. If price breaks a certain point, you can consider that a shift of structure. You can anticipate for price, expect for price to shift structure and continue the other way. If you are in a bullish market, you can expect price to shift to a bearish market. If you're in a bearish market, you can expect price to shift to a bullish market. All right, so that's the entirety of the video. Hopefully you liked it. Hopefully it made sense to you. If it didn't, or if it did, leave me a comment down in the comment section below. And if you like this video, be sure to hit a like. If I provided some kind of value, be sure to reciprocate the favor and give me a like, a comment, subscribe, do whatever it is so I can continue to help you learn about the markets and become financially free. So I'll see you guys in the next video. Hope you enjoyed this one. Peace out.